Friends, on behalf of CGPI, I'll welcome everyone. Friends, we have been analyzing the applicability of GST provisions to different sectors of the industry and practical issues involved therein. So today we are going to analyze the BPO and KPO sector along with IT sector also, which I believe that is one of the major sectors of the industry. For enlightening us on this crucial topic, we are fortunate enough to have Mr. Naresh Lakhani. I'll briefly introduce him. Mr. Naresh Lakhani is a chartered accountant. He also completed CPA, USA, and CMA and runs a consultancy firm. He had been the CFO of Convergys India and on the board of legal entities prior to this. He worked 6 years in the USA. He has deep passion to contribute and support society. He is a yoga enthusiast, public speaker, and motivator too. So we really have a very learned speaker today, and I'm sure this session is going to be full of knowledge and insights on the subject matter. So with this, I request Naresh sir to take the charge and start the deliberation. Over to you, sir.
Thank you very much, Tanmay, for giving me the opportunity to speak to the audience. So before I start on GST, I will take one extra minute to talk about self-well-being. Sometimes, we actually being so busy in our profession, we forget about self-well-being. Self-well-being is nothing but actually to take care of yourself, your behavior, your activities, your physical health, your emotional health, mental health, cognitivity, social and spiritual aspect. So I tell everyone, whatever time you spend on profession and with the family, please spare 1 or 2 hours of a day for yourself. Unless you take care of it, your own health, own happiness, you are not going to be complete, man. Howsoever you may grow, but somewhere, the other things or the personal things will lag, and it may turn out to be abnormal growth, where you are not a holistic, full, complete person, a happy, healthy, stable purpose person who can contribute to the society as well, not only to the profession. And next, I will start now with our GST session. So this is about a specific GST solution. We will cover the following sectors. I'll cover specific questions around software companies, document processing, data entry processing companies, IT help desk. All these industries will have similar questions to what I will discuss today. Call centers, chat support, or companies supporting legal and accounting services, R&D services, telecommunication. So all these companies would have similar issues or question what I will discuss today. And this will more or less would be in question and answer. So I'll be, putting up a question as well. Also, I will have the answer for it. So specific GST student will cover, make it question and answer session as I mentioned. So the first thing I have in my mind is usually we have software. Do we consider it as goods or services under GST law? I would make it first in a simple language or informal language. We can say that if only services are provided for any software and no final or ready to use product is delivered, it is called services. So if you are doing just service, no final product, no final outcome or ready to use product is produced, anything you are doing would be considered as service. If not a final or ready product is delivered using services or otherwise, it is called goods. So any goods, so let us say if I buy tele software, I buy QuickBooks, or I purchase, let us say, software from SAP. So that would be considered good. Whereas people who are doing, let us say, some outsourced company or people doing coding for it or someone doing customization for it, that would be considered services. Now I will talk about the technical, how technically it is written under the GST law. The term is defined under Schedule 2 of CGST Act 2017, where it says that development, design, programming, customization, adaptation, upgradation, enhancement, implementation of information software, and temporary transfer or permitting the use or enjoyment of any intellectual property right are treated as services. So if you see in this situation, anything customization, adaptation, upgradation, you are not giving anything new. You are not giving anything ready-made which is ready to use. It is simply you are just doing some job on it. But on the other hand, if a pre-developed or pre-designed software is supplied in any medium, so any medium when we call, you buy something from the shelf, which is not very common these days, but you download some software and there is some encryption key which you put, to run the software as, the legally purchased software, like we buy Microsoft, Microsoft, Office we buy. So we have keys, we put it there, we download it, and that is called actually a goods. That is covered under the goods category. And let us say, as I mentioned previously, you buy SAP and you get customization on it according to your situation, or you buy, or you actually run some GRC software on it with some changes, amendments, all done, that would be covered under the services. So services, again, no new product is given, only some changes, little bit here, implementation, enhancement is done, whereas goods are just, the full final product, which is ready to use. Now the question is why we are discussing it. Well, how does it matter whether it is service or goods? Since we call it goods and services, and we talked about that it is one law both for goods and services, but there are some distinctions made under the law. Some provisions are applicable only for services and some provisions are only applicable for goods. So we have to make sure that distinction is done properly. So primary implication I would say is that that for the service software services, composition scheme is not applicable. Under composition scheme, as you may be aware, which is based on fixed rate of turnover and no ITC is available. That thing would not be available for services under IT or IT sector basically. Another question we may have is, there is a person, very simple question. A is a dealer in computers and computer parts having turnover of 8 lakh rupees. Does A have to register with GST? So the turnover of the computer parts company is only 8 lakh rupees. We all know that the limit at the aggregate turnover of any company in a financial year should exceed 40 lakh rupees for goods, in case they want to, for mandatorily having registered. But if it is less than that, they are not required to register it. But as an option, let us say if they are selling interstate, if let us say I want to sell some goods from Gurgaon to Delhi and I want to ship it there to Delhi. For that, even if my turnover is less than 40 lakh rupees a year, I need to have it. Otherwise, I can't do it. In that situation, only someone can buy from my office or from my store or from my shop and can take it there. But I cannot ship it there. I cannot send it there. And also there are limit for the reduced limit is for special category states. Most of them are hilly states where 20 lakh rupees turnover is required. But when it comes to services, the limit, the maximum limit where you may not have registered as a GST vendor is 20 lakhs for services. So this is lower, half of it. And for special category, it is only 10 lakh. So you have to keep this in mind. Another question, which again specifically for software or KPO or service industry, maybe a registered person B receives small portion of software code from individuals, which he then integrates and supplies as package to clients. So there is a B person who is receiving software codes made by someone from different states and different vendors who do all this, and it is sent by one particular software manufacturer who is B. These individuals, the ones who are making software or supporting him on the software, are having small turnover, let us say 5 to 10 lakh rupees. And therefore, they don't need to. So as I mentioned, they don't need to register under GST because their turnover, those who are supplying the software code or services or goods, whatever, they both are less than 20 lakh rupees in normal circumstances. They don't need to register themselves especially for services, they don't need to register themselves under GST. Now, the question is whether there is any liability on B for such, so whatever input or reverse charge, is there any liability for that? The answer is if the supplies are made by unregistered supplier, GST is not liable to be paid by recipient who is a registered person under Section 9(4) of GST Act 2017, unless it comes under notified reverse charge category. So there is a specific notified reverse charge category only in those situations. So for example, lawyers are the one, on whom you have to pay reverse charge. Similarly, also you have to pay on some foreign goods if you purchase. So there are some notified reverse charge. Otherwise, you don't need to do it. So if the person is unregistered, providing services to you, you don't need to worry about it. If they are less than the turnover limit and not registered, you don't need to pay any reverse any GST on reverse charge. So therefore, B is not liable to pay GST on services provided by these individuals. Again, this is more applicable for services, not for if they were selling, some goods to him, then they had to pay on reverse charge, then they were buying it. Another question is, what is the rate on IT or KPO or BPO industry, if they are working for local companies. So the rate both for goods and services is same, right? For IT sector or KPO and all that is 18%. And they are not categories, in many other goods, food and other things, there are many categories. This is very simple, 18%. Another question which is very common is on exports. Most of the companies in India in KPO, IT sector or BPO sector, they export their services. So they are working for someone who is sitting outside, who are taking their services from outside. For example, there is a company called Concentrix India, which is serving for the clients of Concentrix globally. And let us say they have client in Australia, UK, US, and all that. People here are taking calls or doing chat with their customers, customer support service, all these things. It's very, very common. So the question is if that attracts GST or not. So this will, in normal circumstances, be covered under exports and supplies situation. So these are usually zero rated, be it exports or supplies to SEZ. Both are considered as zero rated GST. So zero rating effectively means that no tax is payable on exports, but an exporter supplier is entitled to input tax credit. So they are entitled to receive the money back which they have paid on input. So let us say I am exporting services of 1 million US dollars a month, but I have purchased computers, laptops, or let us say cables, or many other things, services of chartered accountant I have received from the local office. So as per the law, the input, I am going to get, ideally, I am going to get a refund out of that. There is a credit of that. So output, there is zero. Input, there is, the credit. But this is only for export of services. So for that, and how this can be managed, there are two ways of handling this thing. One is to pay integrated tax on supplies meant to be exported and get refund. So one is when you export the services, when you do the billing, you basically charge GST for it, and you don't need to charge it to the customer. Basically, you can simply get it refund later on. And the another option is you give an undertaking to the government at the beginning of the year, which is called to make export supplies under bond or letter of undertaking. It is commonly called LUT, and claim refund of the input. So in this situation, you have already paid, let us say, for chartered accountant services, audit services, for rental of the real estate. And also I mentioned you bought computer equipment. In the second situation, you can simply claim refund of it once the export realization is done. So two situations again. One is you pay simply integrated tax on sales itself. And the another and get the credit at the same time, of input services, obviously you're going to pay the net, and then you claim the full refund from the government. Now the question comes is, how do I determine whether IT services or BPO services or the chat services provide constitute export of services? Because not every time you do something would be considered export. So there are some certain conditions which you have to meet before those can qualify for export, and you can get this benefit of zero rated service or refund and all that. So the supply of services is considered an export of services where the following conditions are met. So the first condition is the supplier of the services is located in India. So there is Concentrix, as I gave example, Concentrix office is located in Gurgaon, where people are sitting and working for the US office or the US clients. So both clients, all the clients, are outside India. The recipient of the service supplier is in India, and the recipient of the services, let us say Concentric US, or the clients, their own clients are sitting in foreign country, outside India they are sitting. Let us say US, UK and all that. And the place of supply of service is outside India. The place of supply under the place of supply rules should be considered outside India. And also there is the fourth condition, which is also very, very important. The payment of such services have been received by suppliers of services in convertible foreign exchange. So the billing can be in INR, but when the payment is done, it should come in foreign exchange. Let us say one option is I have $1 million billing. I simply do $1 million billing and I get money $1 million from my US client, and that is converted in India. The money foreign exchange should come in India. Another is I can also do billing in INR, but the money should come in. Let us say I did billing of, let us say, 7.5 crore. So this is a very tricky question. Then the possibility is the conversion, that they may send money in, let us say, US dollar for equivalent to 7.5 crore, or which is then converted into India. So the money should, billing can be in any currency, but the money should come back in foreign currency. I hope I have tried to make it point very clear. At the end of the day, my billing again can be $1 million or it can be 7.5 crore, either or. But when the client gives the money, the bank gives the money, their bank gives the money, that should be in foreign currency. Now, as I mentioned, how do we determine the place of supply in such situation for such services, IT, BPO, KPO, all this? The place of supply would be determined by location of the recipient. So the recipient of the service, where that person is located, that is determined under section 12 and 13 of IGST Act. However, if there is a possibility, let us say the Concentrix office is in Cincinnati. So that would be, Cincinnati is in US. So US will be, it will be considered outside. So this was, if you remember, one of the conditions, that the recipient of the services should be outside India. So that condition is satisfied. However, there is a possibility that if the recipient is not registered and his address is not available, there is possibility that our address is not available on record or cannot be found there. Then the supply, or let us say, if I cannot prove that, the actually client is in Cincinnati, there is a possibility, I am saying it, but I cannot prove it. Then the place of supply would be the place of location of supplier. So I should be in a position to prove that, the client is actually sitting in Cincinnati, US. But if I cannot prove it, because government wants to make sure that nobody is avoiding, there is possibility that someone is avoiding taxes, and just saying that someone is sitting in Cincinnati, someone through some foreign account gives the money, but actual services are provided in India to some, let us say, from Gurgaon to Mumbai only. So in this situation, if I cannot prove that actual client is sitting in Cincinnati, and then my Gurgaon location would be considered supply of location, and then it would be considered local or Indian services. Then I cannot claim this zero zero rated, tax, or I cannot get refund out of it. Another question is how to determine the location of the recipient. The location of the recipient of services is defined under Section 214 of IGST Act. A recipient of services is treated as located outside India if his place of business where he received the services is outside. So as I mentioned, if the place of the business of that person is in USA, let us say Ohio or somewhere else, that would be where his office is, let us say, where he usually sits for the business. I mean, in this pandemic situation, he may just have office and people may be working from their home, but that is fine. And if he does not have a place, let us say he is working from home in pandemic, let us say, he has no office, then the where that person usually resides. So let us say this person resides in Ohio itself or in Florida or somewhere else, then it will be considered, then also it will be considered outside India. But if he has no office, he is serving, but he is sitting in India, then it will be considered India. There can be a situation, someone resident of US, he has no business in India, but actually he has business in the USA, but he has no business place in the USA, nowhere he can prove, and he is managing everything from his residence in India. Then such services will be considered local, and the tax exemption or the zero rated tax situation would not arise. So first is he needs to have an office, or his then second option is he doesn't have office, his residential place. His residential place in my first situation was in Florida, and he was serving, let us say, clients in Ohio. Then it works. Another question could be, would I be liable to pay GST on reverse charge if the foreign supplier of software from whom I buy for use in my registered GST form? There is a GST registered firm in India. Let us say I have my firm called ABC Company Limited. And there is a foreign supplier from whom I am buying computers or software. But he is saying that, okay, you pay this money in INR. I have a bank account in INR. The Reserve Bank has its own regulations, but let us say hypothetically that, or the payment going back, let us say to his home country, is in INR. They accept it. So in that situation, would I have to pay GST? So the answer is yes, he will have to pay GST because the supply is an import and the place of services of goods or services in India. Because the supplier is outside India, the recipient of the services is, let us say, located in India. So, and the place of supply in this situation would be considered India. So it doesn't matter that, if it is paid in INR or if it is paid in foreign currency or not, still he will have to pay. So the purpose of this is to make it at par with the other local vendors. They don't want to, the government does not want to give benefit to the foreign vendors. Because let us say if similar services are provided by someone locally, the recipient would still have to pay taxes. So similarly, if they are buying from someone outside India, they should also be paying, taxes. Only then the comparison would be apple to apple. Otherwise, people who are providing services or goods from foreign would be in advantage and the recipient would not have to pay taxes. So this is kind of a parity concept to bring things in under parity. Now another question could be, I am an Indian company who makes software and sells it outside India. And I have hired a foreign firm, let us say, not related to me, let us say C. So I am A, I have hired C, who is also located outside India abroad to facilitate the supply of software in Europe. So let us say an agent. I am Naresh Lakhani. I have hired an agent sitting in Europe or US to sell my software or to do, let us say, be my agent and do some work for my local customers in the US or Europe. Would I be liable to pay GST on the payment that I make to this entity or this person, B person? The answer is yes. The logic for that is So I'm sorry. The answer for this is actually no, because the logic for this is, in this case, the recipient is, or the supplies are actually done outside India, and the person intermediary is also located outside India. So if you see, the place of services of goods, services or goods supplies of goods is also outside India, and also the person sitting and doing services, let us say agency services or finding customer and all, so is sitting outside India. So in this situation, under GST Act Section 213, this will intermediary services would be considered located outside India, and no GST is payable on commission paid to the agent which we hired in Europe, whose name was B. Now there can be a reverse situation also. So let us say I am an agent. I am sitting in India and I am finding local customers for my foreign client. My foreign client, let us say software company selling software in India. They have hired me, Naresh Lakhani, who is located in Gurgaon. And they want me to do their base work, find the customers and, get some money on their behalf and transfer it to them. And I get commission out of it, and or let us say I charge them, I pay them full amount, and I charge them in foreign currency. So in this situation, should there be tax, GST? The answer is yes, because if you see the place of supply, the goods are sold or the services are provided in India, the end customer is in India. I am an agent who is also located in India. So in this situation, the law says that you will have to pay GST on my service, even if I charge them in foreign currency. It is very common in some other situation also. If you see that there are some manufacturers in China who have their service providers, or the services are provided by their local entities in India. I know one of my customer, my client, they are Chinese and they provide batteries to Reliance Jio, and their service provider is in India. So the free of cost services, let us say under warranty, the warranty is provided to Jio free of cost, and then they charge it to their Chinese customer for the services or whatever, wrong goes there. So even if the money is coming in foreign currency, but if you see the place of supply, the actual work is done for Jio or Reliance in India. So for that reason, the GST has to be paid. Because again, this is to bring in parity with the other clients and other customers. Let us say if similar services was done by someone outside, Jio had to call someone from outside, from within India, sorry, from within India, if they had to call someone, they still had to pay GST. So similarly, someone associated with the Chinese company or their affiliate sitting in India doing it, they will have to pay the GST, even if the amount is charged to the Chinese company in foreign exchange. Another question may be, I have more than one SEZ unit. SEZ unit, as you know, is also zero rated if provided certain conditions are met. So I have more than one SEZ unit in different states. Do I need to have separate registration? So for SEZ units, you need to, in different states, if you have SEZ units in different states, you need to have separate registration. It is similar to if I have two units or two branches or two service providing, units, one, let us say, in Haryana, another in Maharashtra, I will have to have, two separate registration. Similarly, if I have two SEZ units in two different states, I will have to have two registrations. Similarly, if I have one SEZ unit and one non-SEZ unit, let us say, for local clients, I have one unit in Haryana. Even in that situation, for separate registration, I'll have to obtain for local unit for in Haryana, and also for SEZ in Haryana. Let us say if I have in Gurgaon somewhere, I will still have to I will still have to obtain separate registration. But if I have two SEZ units in, let us say, one in Gurgaon, one in Hisar, within Haryana itself, then I don't need. So within one state, if I have more than one SEZ, I don't need to go for more than one registration. But if SEZs are in different states, I have to get different registrations done. And if in the same state I have one SEZ and one domestic, DTA, the domestic serving company, I will have to have separate one. So for domestic one and SEZ, I need to have separate unit, separate registration, even if they are or belong to the same company and in the same state. Another question which may commonly arise is what special provisions are attracted in under GST with regards to associated enterprises. It is very common for BPO or IT sector companies or KPO companies where they have associated. The parent company is, uh, let us say, is in UK or US or Australia, and a subsidiary is in India, which is working, a captive unit or 100% serving the company which is outside India. So first we need to know is what is the definition of associate entity? When an entity is considered associate entity, an enterprises which participates either directly or indirectly through one or more intermediaries. So there is an entity, let us say A, and there is an entity, let us say C, but there is a chain of other company, let us say in Mauritius, UK, and all that. There is a chain of holding or the management of the holding company through intermediary company, maybe one or directly, directly or indirectly. One option is that the US company directly has ownership or management or control of the capital, all these things directly of Indian company, or through, let us say, they have an entity in Dubai and through that they are managing it. But somewhere the chain is there. So that is indirect. So again, it could be the management or control or the capital. These three conditions, if are satisfied, these are considered associated entities. So I'm talking about associated entities because there are specific provisions which are applicable to associated entities. So in such situation, what are the special provisions? So associated enterprises is relevant in study in case of supply of services where supplier is located outside India. In such a case, the time of supply will be the earlier of date of entry in the books of accounts of recipient. So when the books of accounts, so there are associate entities, and the work is done. Now the event of when the event of GST arises, or when actually the trigger GST event triggers. The one is either you enter in the books, just book entry is done, services are done, even if or received amount is payment is received, whichever is earlier, you will have to the event of GST or the liability of GST will arise. Now you can say that this similar provision we have for the Indian entities also. But in case of non-associated foreign entities, if there is no relationship between the two foreign entities, the GST liability arises at the time of payment only. Whereas in local case, we know that if I am billing someone, my client in Mumbai, and I am sitting in Gurgaon, the moment I bill or the moment I enter in my books, revenue or the payment, whichever is earlier, I will have to, the liability of GST arises and I will have to pay to the government for that particular month. But again, if it is non-associated entity, foreign invoice is coming, the GST liability arises only in case of payment. So there is a possibility that, the actual payment is made after 4 months of the billing done by a foreign entity. But again, that is only where they are non-associated. But in case of associated entities, again, the books, because the person is known, the assumption is that person is known, they would have already informed you that they have done entry in the books and they would have already conveyed it to you, that this is happening, the services have been provided. So for that, they should be considered at par with the India to India transaction. Whereas in non-associated entities, sometimes you don't know when the invoice, when they have entered in the books, they may not even inform you. So in that situation, the liability arises only when the actual payment has happened. Now, another question is, what would be the tax liability on replacement of parts? It is possible that, IT company is replacing some parts. No consideration is charged from customer under warranty, and whether supplier is required to reverse input tax credit. So there are two situations. One is there is a company A which has provided goods or services, goods basically, to company B, and something wrong happened in the company B, and they send, let us say, the goods back, or something, some services had to be provided in the warranty. In that situation, what will happen? Do they still need to pay GST amount on the fair value, or if not, input tax credit, should that need to be reversed? So the answer to both is that one, no liability arises if in warranty. So assumption is that when you do something in warranty, warranty cost was already covered when originally goods were sold. So let us say when the goods were sold, they were sold at 1,000 rupees, and uh, warranty was given for parts and services for 1 year. And somewhere, if you see, the manufacturer or the supplier of the goods would have considered, let us say, on an average, the cost, let us say 100 rupees out of the 1,000, they would have already considered. So they have already built in the cost. So when something is done for free of cost later on, already they have charged. Similarly, input tax credit, when they have already paid taxes on output, and already they have covered under the original sale. So there is no reason that input tax credit, when it is done for free, should be reversed. So input tax credit would not be reversed, and also there is no need to charge any amount. Only thing is that under warranty kind of invoice can be made, or some challan can be issued to them for zero price, no GST, no input tax credit to be reversed. Another question could be, what would be the tax liability on replacement of part? Sorry, this is already been covered. Another question could be, an original equipment manufacturer has an obligation to provide repair services to their customers in the warranty period. This activity is outsourced to company, let us say another company, A company, who bills to OEM, original equipment manufacturer, for the services they provide to the customer. What is the tax liability of A? So here there is a OEM, a company, let us say B company, who is providing goods to, let us say, C company, selling to them, but they are getting their services done by company B. And B company, obviously, when they do services for company C, they will not charge to C because they are working on behalf of the original equipment manufacturer. So in this case, when the B is providing services to the customer C, he is charging to OEM, he will have to charge GST also. So let us say goods were sold at 10,000 rupees to customer C, and there is B who is hired. They are doing services for 1 year warranty, free warranty period. So now B has charged, let us say, 200 rupees. They did some minor repair, and also they, change some component there at the company C. So for that, original manufacturer supplier will have to pay for the invoice, not only 200 rupees, they will also have to pay GST. But they can use the input tax credit, for their future sales. It is not a problem for them. Another question could be, how will the defective parts be sent? Now the question is, you have defective parts which you are going to send to the mother warehouse, repairing center, for repair by the downstream repair center. It is very, very common, you have, let us say, a client in Mumbai, then there is warehouse you have, or you have a person sitting in Mumbai who is going for repair on behalf of, let us say, Gurgaon company to the Mumbai office of the purchaser and do some repair, and then they send some component for repair back. One option is they get charged, or one option is they send it for free. So at the time of sending of the defective parts, all they need to do is just a delivery challan accompanied by e-way bill. So in the delivery challan, sending back for repair, something needs to be written like that, and no GST liability arises. However, if the repair center, let us say, which was in Gurgaon, when they charge you back, let us say they charge the customer or they send it back, they will have to obviously charge it with the GST. So any such transaction happening, if it is free of cost, then nothing needs to be paid. Again, it will go under challan for free without GST. But if anything is charged to the client, that repair will also be done and GST will be charged. Another situation could be, what is the tax liability in a scenario where suppliers are made from multiple locations in different states of a supplier to recipient under a single contract. Now the situation is a little bit tricky. I have, let us say, the main head office of the company is in Mumbai, and they have office in Bangalore, Gurgaon, and let us say Rajasthan, Jaipur, and various other states. And there is a single contract where the Mumbai company is charging, let us say, to someone in Chennai, or let us say it could be a foreign customer also. I'm just naming it Chennai. So when they are charging it to Chennai, so here what will happen is arm's length. All these branches are somewhere associate entities. The one in Haryana, we talked in Jaipur, or let us say any other location. So they all will charge at arm length price or third party price you can call to the Mumbai entity, and Mumbai entity will make one invoice to the company or their client in Chennai, and they will charge GST there. So the input tax credit of all the arm's length price which the local ones, the Haryana, people from Haryana and Jaipur charge, would be used as input tax credit. So somewhere it will be tax neutral. But again, invoices have to be charged. Even if they are within the same entity, you still, same legal entity, but if something is sent or some services are provided from one location to another, invoicing has to be done. Another scenario could be, there is a headquarter. So again, as I have already discussed this, that headquarter will get the ITC benefit of the GST paid by the branches. So again, this will be a revenue neutral situation. Another question could be, can payment of IGST on reverse charge basis or on import of goods or services can be done through book entry or ITC? So it is quite common. There is a manufacturer in, let us say, again in Haryana, and he is buying a machinery from Germany. And he already has a lot of input tax credit. Let us say he, from the local or other purchase, he had input tax credit, he still does not have revenue. Can he use that input tax credit which he has in books for the reverse charge, import of machinery from Germany? So the common sense says that no, he will have to pay that in the cash. And the logic for that is, let us say if he had to buy the similar machinery from someone in Mumbai, he still had to pay to the vendor in Mumbai. There was no way, he could adjust that with the ITC, input tax credit he already had. So it is again to keep both the foreign vendors and the local vendors at parity and at par, and not to make the local ones in a disadvantageous position. So when you are purchasing instead of from outside, instead of the seller paying GST, the reverse charge GST has to be paid at the custom level, and that has to be paid in cash. Again, to make it sure that it is similar to what if you would have purchased that machinery from someone in Mumbai, obviously you would have paid GST. You cannot use input tax credit for your purchases. Another thing could be that what is the format? Is there any format prescribed by invoice format prescribed for reverse charge payment of GST? There is actually no format, provided by government under any rules. It is only especially for this reverse charge payment. Only there are certain items which you need to include in the reverse charge invoice. So, for example, the value of the goods, the the code, the GST code for that, the kind of services provided, obviously the date, the place of supplies, all these, these are there in the Rule 46. You can go and in detail and check. All the items, separate items should be there. The total should be there. GST amount should be separately written there. All these things are written in Rule 46 of CGST rules. But there is no specific format, that in this format this needs to be done or that needs to be done. Another situation could be there is a software provider registered at Mumbai and supplied to my clients in Bangalore. So I have clients in Bangalore where I am selling my software from Mumbai. Now the question is, do I need to be registered in Karnataka? Remember, I don't have any office or any particular location, where I usually do business in Karnataka. So in that situation, obviously, no. I don't need to be registered in each and every state. So for example, these days people are selling their goods through Amazon to everywhere across the country. I don't need to be registered in each and every state. I just need to be registered in the state where I am doing the supplies, which is in this situation is Mumbai. So only Mumbai registration is required. And instead of CGST and SGST here, IGST would be charged. So interstate IGST has to be charged to Karnataka, and no formality other than that needs to be done in Karnataka. This is my last question scenario. I am an exporter of services. Would I be entitled to refund? I have already discussed. Yes, the exporter of services would be entitled to ITC the the tax paid on output provided they meet the conditions of export. Also, it is very common, common mistake I have seen. People think that for export you must need to have registration of GST even if you are in services. This is actually not right. For services, in normal circumstances, if you have services, we are providing overall turnover of services, including the local one and the export one, are less than 20 lakh rupees. You don't need to register, but only this is only for services. You don't need to register for services if you are doing exports. Similarly, if interstate you are doing services, interstate services. No, good for goods, yes, you need to have. But if I am in Gurgaon and I am providing services to someone in Mumbai, and my turnover, my revenue of services, only services I am saying, I am just providing services as a chartered accountant, my total revenue is less than 20 lakh rupees, I can still provide it to someone in Mumbai, but I cannot sell from here goods to someone in Mumbai. So there is a distinguish between goods and services, especially if registration is needed or not for less than 20 lakh rupees. So with this, I would like to end. I'm done with my session. Thank you, Tanmay, for giving me opportunity.
Sir, thank you so much. With this, sir, I would like to propose a hearty vote of thanks. Sir, thank you so much for such a wonderful session. You have taken us through the various provisions in a very simple and lucid manner, I would say. You have also dealt with the various practical situations. The most difficult problem in or other, the idea of this recorded session that people can see or watch these recorded sessions at their convenience. So this session being a recorded one, definitely we cannot have a live question and answer slot. But sir, I must say that your way of delivering the session in a question and answer format will definitely help our members. I'm sure that most of their questions will get resolved after listening to this session. So with this, I once again thank you for taking out time and delivering such a wonderful lecture. We would like to have you again and again for our future activities or sessions. With this, friends, I am ending this session. Thank you so much.
Thank you, Dhanmeji, and thank you, CGPI. Thank you very much.
Sir, thank you so much. Yeah.